when shit hits the fan, let's just print more money. It's like your Route 1 approach to kill a recession, just like you would use your MP4 with a silencer back on the Call of Duty Modern Warfare on Search and Destroy in order to go and kill some noobs for you OG gamers out there. The strategy is pretty much the same. That decision was taken late last night by the Federal Reserve to launch a $700 billion quantitative easing plan in order to help stimulate the economy due to the impacts of the C-bomb. All of this has resulted in the Dow Jones futures being down 1,000 points as of right now. Likewise, the S&P 500 futures contracts have also been paused at their daily limit, as I have just read. And because of that, it's likely that we're going to see a very rocky week ahead in the stock market. But what does that mean for the American people and the American economy? Well, for the American people, the value of the United States dollar potentially has just dropped overnight, and it could have a long-term effect on the value of the United States dollar. The reason being, quantitative easing is used in order to stimulate an economy. It is used in order to encourage banks to lend more money to people and businesses. And when you have huge influxes of spending, that drives inflation. And with higher levels of inflation, that drives the value of a currency down. And we've seen over the past 100 years, since 1913, the value of the United States dollar has lost 96% of its overall purchasing power. The reason for this is largely down to the knock-on effects of increasing the money supply. But that's not all, because the Fed, not only did they launch a quantitative easing plan, they also just cut rates. Now, the Fed only just cut rates at the start of March, on March 3rd, from 0.75 down to 0.25, a difference of 50 basis points. Since then, last night, they've now decided to drop interest rates once again down to 0, so flat interest rates. So what does that mean for you and me, the average kind of people? Well, it means nothing for me because I don't live in the United States. However, the Bank of England appeared to be taking the same stance by reducing our Bank of England base rate down to 0.25%. Obviously, if you're over in the US, it's slightly worse for you with your interest rates being down at 0%. However, depending on which side of the fence you're on, it could be good or bad. So let's firstly start with the positives. If you have student loan debt, it's fantastic for you guys because it means your debt repayments will be lower, driven by the lower rates of interest. Secondly, mortgage rates will reduce for those on variable rate mortgages due to the fact that the interest rates have dropped. Thirdly, car loans, personal loans, all that kind of stuff also will be cheaper to pay back because the interest rates are now lower. So for those of you guys who are in a lot of consumer debt right now, it could be a fantastic time for you guys to actually regain control over your finances, pay down some debt whilst the interest rates are so low. However, there are negatives to this whole situation. For the savers out there who prefer to keep their money in their bank account as opposed to getting involved in all of this stock market mayhem that's going on at the moment, this unfortunately is a terrible situation for those guys. The reason why? Well, the bank is not going to pay you any interest on any money that you have stored with them, and because of that, you do not have your money working for you. Similarly, as I said before, quantitative easing could also drive inflation, and with interest rates at 0, and if you've just got your money sat in your bank account, that again is a negative situation for you. Because if inflation is higher than the interest that you're being paid on your bank, if you don't have your money working or mobilized in any other possible way, then you will get poorer and poorer every single year. The reason why I say this is, let's say inflation is 2.5% per year, but the bank is only paying you 0% interest on all of the money that you have saved with them. That means the cost of living, the cost of goods are going up by 2.5% every single year. It'll only take 4 years for you to become 10% poorer overall. It really does ring true and make a lot of economic sense when you hear people say that during times of a recession and hardship, it is the largest transfer of wealth between the rich and the poor. But I'll leave that to you guys to make your own conclusions based on that statement. So in summary, it appears the whole world is currently going into Route 1 contingency planning, hoping to try and stimulate economies before they get impacted by this whole epidemic that is currently happening right now. So let me know what you guys think of the rate cut decision and the quantitative easing plans from the Federal Reserve. As well, be sure to smash the like button, subscribe if you're new around here, and with that being said, I'll catch you in the next video.